Hi everyone, this is Mackenzie Cormier with the Deborah Lucci team from William Raveis Real Estate, and we are here today with the insurance director from William Raveis Real Estate, Nicole Vargas, to talk all things insurance. So, Nicole, why don't you give a brief introduction about yourself and kind of, just how long you've been in the business for?
Thank you. Thank you for inviting me to your live today. I really appreciate the opportunity. I've been doing insurance for this year. It'll be 17 years, and I've been writing personal lines, home, auto, anything personal, watercraft, liability, all of that stuff. So I've been doing this for a very long time.
Okay, great. And one question that I get asked a lot from my buyers, especially first-time home buyers, is like, what exactly does homeowners insurance cover, and is it required for everybody to get it?
So you're only required to get it if you're going to have a mortgage because it's the bank who really requires you to have insurance. If you buy a house outright, you don't need insurance. That's totally up to you if you want to self insure. Um, Home insurance includes everything except for land. So it includes dwelling and any detached structures like a pool, a shed, a garage, um, greenhouse, anything that's detached from your house. The only thing homeowners insurance does not cover is the land of the house.
So Nicole, if you have a condo, do you have to have insurance in the inside if you have a mortgage?
That is completely up to the bank, and more than likely, they decide that based on the master insurance. So they look at what kind of master insurance you have. Every master insurance for every condo association is different. Some of them will include the inside of your house, some your unit, and some don't. But what they never ever include is your personal property. So if you want to have insurance for all of your belongings that you have inside of your unit, then you should have what they call an HO6 condo policy.
Okay.
Um, let's see, what else? Does it cost less to insure a newer home versus an older home? And is the cost also different for a condo than a single family home? Like, how does that kind of differ?
So a condo policy does differ from a homeowner's policy because a condo policy is including the inside of your unit, where a homeowner's policy is including the entire dwelling. Um, and for the most part, there's a deductible when it comes to the master condo policy. So an HO6 policy for you would include that deductible so that you don't have to come out of pocket. But normally, it is a lot cheaper to insure a condo than it would be for a house. Newer houses are, for the most part, are less expensive than an older house, only because they are modernized. They have all of the modern tech technologies. They also had today's market, a lot of the houses come with all the bells and whistles, and the insurance count that as discounts for your homeowners policies, like the water shut off valves. That's a discount. Generators, there's a discount for that. There's a lot of stuff. Even they even include stuff like alarms. A lot of them come with alarms already. A lot of the older houses don't have them, and people are buying uh, they're buying alarm systems from like Amazon versus a certified installer that comes and installs all the cameras and stuff like that. So every discount for alarm is different. It depends on what type of alarm you have. But normally the newer houses are less expensive to insure than an older house. And the price of materials as well. That also is a big deal.
So I have a question for you, Nicole. This happens, especially this time of year, a lot now. So um, seller does not live in the house. They've moved out. What is the period of time that that house can be vacant? And then don't they have to go into like another type of insurance or something like that? And, what constitutes the house being vacant? So, for example, if you've got a relative that puts a mattress down on the floor and they sleep over there every once in a while, is that considered vacant? I mean, what's the difference in pricing, timing, things like that when somebody has moved out of a house?
So that's a very good question. Normally, when that happens, I will contact the underwriter to the company that's already insuring the house to explain to them the situation. Everyone's situation is different, and ask them what is the time allotted that they'll allow the insured to get a vacant policy for that dwelling. A vacant policy is more expensive than a homeowner's policy simply because the liability is a lot greater. It's a bigger risk of someone breaking into a house when no one's in it. So they definitely prefer that you that the homeowner lives in there. If you have a relative staying there, it really depends how often they go. Every company has different underwriting guidelines. So that is, again, totally up to the insurance carrier. And they basically let us know and then we'll let you know, and we work on getting you a quote for a vacant home policy. Or if you plan to rent it, we can get you a landlord policy, which is called a dwelling fire policy, which basically covers the dwelling, but it's not going to include personal property for your tenants. So there's different types of policies for different situations. And there's also every carrier has different underwriting guidelines. So there's not a straight black and white answer for that.
So do you have to get a vacancy insurance as soon as you move out, or do you have like a grace period or anything like that?
So if you're going to be selling the house, and that's the reason why it's vacant, because you moved out, you bought a new house, and you still haven't sold that one, a lot of times the insurance company will allow that, and they'll tell us, well, they have 30 days or they have 60 days. It really all depends on how that insurance company, how long they want to stay on it while it's vacant. And vacant just means no one is living in it. Some companies say it's considered vacant if there's no furniture in it at all. And some companies will say, no, if nobody's living there, it's considered vacant. When I first started insurance, it used to be they couldn't be no furniture. But as the years have gone by, they have changed a lot of those guidelines. So it really depends on the insurance carrier.
Okay.
Nicole, what if, let's say someone owns like 2 houses, for example, and let's say they're at a point in their life where they can split their time like 50-50, and they're somewhere for 6 months and then at the other property for another 6 months. How does that work? Like, would that be considered getting some type of like vacant policy?
No, so that's a secondary home. It's strictly a secondary home. Most companies prefer that you have somebody assigned to check on the houses while you're not living in there. That's their preferences, but that's not something that they require you to have. But if if you're a snowbird, for example, it's just considered a secondary home. Your primary home is considered where you have basically where you're licensed at. So if you're licensed in Massachusetts, but you spend 6 months in Florida, your primary home is going to be considered in Massachusetts and your secondary home in Florida. Or if you spend more time in Florida and you say, no, I spent 8 months out of the year in Florida, then that will be considered your primary home. If you split it in half, 6 months, then wherever you're licensed at, that's your primary residence. That's what they'll use as primary.
Okay.
Is second home insurance more expensive?
No, not necessarily. It's basically considered a homeowner's policy. It's just a secondary instead of primary.
Now, what if somebody's doing a rehab on your house? What if you're going through construction? I mean, I'm talking fairly extensive construction. Do you have to notify your insurance company, or basically do we have to make sure the contractors have insurance? How does that work?
So you need a builder's risk policy for that. So no insurance company is going to want to insure it as a homeowner's if you're doing extensive work. If you're doing little work inside, they don't mind that so much. But if it's extensive work, they want you to have a builder's risk policy. And yes, it's more expensive than your normal homeowner's policy, again, because there's a higher risk. I personally would suggest that you get a certificate of liability from whatever contractor you hired to do it, to make sure that they're insured as well, because they can come after you if they get hurt and there's no insurance on their side. Literally anybody can sue anyone for anything, but you're taking a risk if they have no insurance. So you want to make sure that you ask them for a certificate of liability when you're doing work like that.
I have a quick question. You had mentioned things like alarms and things that will reduce your homeowner's insurance. I've also heard stories about people who have the big outside trampolines and how much that adds to your insurance costs. Can you give examples of, or does it not, or
No, they just want to know they just want to make sure that you have a net around the trampoline. It does not cost you additional premium for having a trampoline. It does not cost you additional premium for having a pool in your house. They want to know this information because those are things that are a liability. There's a lot of claims with kids getting hurt in trampolines. So they want to make sure that you're taking the proper steps to reduce any liability. A net is definitely for the trampoline. For the pool, they want to make sure that you have a gate and it's locked when it's not in use, and that your neighbors don't have easy access to it, because anyone can jump a gate. But they want to make sure you're taking the proper precautions, for someone to get hurt and come after you, but it's the insurance company that ends up coming out of pocket. So they just want to make sure they'll send an inspector out there to inspect, the trampoline and all of the home, for example. But especially if we tell them, hey, there's going to be a trampoline and there's a pool, whether it's above ground or under or regular pool, in-ground pool, they want to make sure that it's properly secured.
How do they feel about diving boards?
Most of them do not like diving boards, but we do have insurance companies that are okay with diving boards. They mostly prefer all the new houses now are getting is diving rocks. And they're just like a little rock that people stand on and jump into the pool, and they're all okay with that. So that seems to be a trend. But for the most part, many insurance companies do not like diving boards. But of course, you're going to have some markets that will allow it.
And we have a question in the chat. It says, what if you have security cameras but not an alarm? Is that a discount on homeowners insurance?
It's a small discount, absolutely. You can send in either a copy of your receipt or a certificate showing that you have purchased and installed cameras, and you get a discount for that, yes.
Okay.
So I have a little story. Many years ago when I started, I was fairly new in real estate. And this is a story good for Amanda and Mackenzie. The house was vacant that my buyers were buying. And we did a walkthrough on it a couple days before the closing, no big deal. And my buyers, who were now the new homeowners after the closing, went into the house and all the pipes were frozen. So do a walkthrough on the house the day of the closing and open up all the faucets to make sure everything works. So luckily we had really good buyers and really good sellers that worked together to get this resolved, because this could have been a huge nightmare. Like, whose insurance takes care of this now? So always do a walk through the morning before the closing.
Yeah, that's a great idea. I actually had a gentleman that closed, and not even a week later, pipe burst under his house. But thank God that he was insured for that. and the insurance company reacted swiftly, and he's very happy with the company. But it's unfortunate these things happen. In a situation like yours, I feel like the insurance companies will kind of go back and forth on who is the person, which company is going to pay out. They have to, try to find out when the pipes froze. But a lot of times it'll fall on the new owner,
Yeah.
unfortunately. But that new owner's insurance company will try to go back to the old owner's insurance company. Nobody really likes to pay out in insurance, right?
Right, exactly.
That's what they like to collect your money, but when it comes to paying out in a situation like that, it'll be they'll fight back and forth, but somebody will pay out.
So you have access to a lot of different insurance companies.
Absolutely, yes. We have
All
over
right. So
20 insurance carriers.
if I go to you and I apply and I say, Nicole, I need some insurance for my house, how do you figure out who to go to? What is the best fit? Things like that. How do you figure all that out?
So every insurance company, right, they kind of tell you their criterias on what they're looking for. So we look at the year that the house was built, the square footage. We look at what kind of pets you own, if you own any pets. We look at everything, the town, the county, because there's some companies that say we don't write in that county. So all of that comes into play. Even your credit history comes into play. So every insurance company, they have different what we call tiers, and it depends on all the information about the house. A lot of times we pull the assessor's office information that they have, all the details about the house, last updates, right? They want to know what kind of electrical system you have. They want to know what kind of heating system you have, when the last time the roof is a big deal. How old is the roof? So all of that stuff comes into play. We put that into a system, and it tells us what the insurance companies feel that the replacement value should be. And that's the number that we start off with when we start quoting. But there will always be an inspection after we bind coverage from the insurance company to make sure that the house is properly insured. But it is determined which company we're going to put you with depending on all the details of the house, your past claims history. They look at if you've had any past claims history and how much was paid out. So all of the insurance companies have different underwriting guidelines and criteria that they're looking for, and it's our job as an independent agent to match you with the right company.
All right. So let's go over a couple inspection issues here. All right. So if you go into Lowell, you have a lot of knob and tube wiring, and it doesn't seem to be as big of a deal as if you go into Andover. It seems to be more of a big deal. They want it kind of removed. So from an insurance point, how do you look at that?
I'm going to tell you, no insurance company likes knob and tubing. So unfortunately, for those who have knob and tubing, they have to go into what we call it's a state mandated company called Mass Property. That's who, if nobody wants a particular home for whatever reason, they go straight into Mass Property. But even Mass Property will give them a time period that they have to change that. They don't want knob and tubing anymore. It has to be circuit breakers. That's what they're looking for. And even with circuit breakers, a lot of companies don't want anything less than 100 amps. So that's another issue. But electrical is a big deal for insurance companies because there's a lot of fires that start with electrical systems. So knob and tubing is a big no-no for insurance companies. They just do not want knob and tube.
Now, what about fuses opposed to circuit breakers?
For the most part, that's fine. They just want to know how many amps, but they like circuit breakers. That's what they prefer.
Nicole, what about flood insurance? Like, let's say you're buying a property and it requires flood insurance. I think I had sent you somebody a few months ago and they had closed on a property and, they had found out that they needed it. So is that like something that you add onto your homeowner's insurance? Is it completely separate? How does that all work?
It's a completely separate policy. Even if so let's say like you have Travelers for your homeowners, Travelers will write you a separate flood insurance company. Flood is totally separate. They don't do payment plans for that. The annual premium has to be paid in full. each and every year in order for them to renew your policy. But flood insurance is completely different. We are lucky now that we have a lot of private insurance flood companies. That used to not always be the deal. We always had to go through NFIP, but now we can actually have private insurance companies that give a lot better rates, and they're able to, they all want to be with different counties. It depends on the county. They favor different counties, so you just have to know which private insurance company, flood insurance company to go to. But Massachusetts, well, it just got remapped. So insurance now, more people need it. But I find so far that the rates are a little better than they used to be. So that's a pro. But flood insurance is totally separate.
What does it run around, Nicole?
It really depends. There's no set rate. It really depends on the county. It depends if there's been prior flood history in that, like a flood claims, and how many flood claims and how much was paid out. So me and you can buy a house in the same block, and we pay totally different amount, even if we are covered for the same amount of dwelling coverage.
What happens if when you own a home, like and it changes over the course of the time, like either you had flood insurance when you originally bought the home, or you bought it without the flood insurance because you weren't in a flood zone at that time. I noticed that these maps like change quite often. So is the homeowner aware when this happens? Like, does the policy reach out to you and say, I just want to I would assume no, but like, how do you know if it's changed?
If you have a mortgage, more than likely your bank will send you a letter letting you know that either you no longer need it, which is very rare, or you now require it. But most of the time people find out that way is through their bank, through the lender, because the lenders don't play. They want to make sure that their investment is protected. So they will send you a letter letting you know you are now considered to be in a flood zone. This is your flood zone. This is what your flood zone requirement is. This is how much you have to insure yourself for. And, we need it by this day.
Yeah, a lot of the sellers don't know if they need flood insurance or not. I had a woman in North Reading. She gave me her plot plan, and it said right on there, not in a flood zone. And the maps had changed a couple of times, and now it was in a flood zone. So let's say, for example, somebody wants to fight flood insurance. Let's say they, like I'm not in a flood zone. I should be up high enough. Now, what do they need to do?
So a lot of times people get a surveyor, and a surveyor will basically determine how high the house is, from what's the potential of the house being having a flood, especially if the house has never had a flood claim. I always encourage people to get a surveyor to go out to give them a determination on whether the house should be insured for flood or not, or if not, or how, I should say, what is the potential for that house to actually have a flood? Because there's a lot of houses that are in flood zones that have never had a flood, and they've been in a flood zone since the house was built, and they've never had any claims history. A lot of times people fight it that way.
Once a surveyor goes out and let's say they determine like, yes, you're no longer in a flood zone, does that have like an expiration date on it, or like does it kind of just run with the land now?
So my understanding of it is that it goes into the town hall, and a lot of times if somebody else buys that house, they're able to pull that, and for the most part they're good unless there's a remapping. So you can use the last person's surveyor's information, their certificate, when you buy a new house. A lot of times I say, you can also grandfather into the current homeowners flood insurance policy. From my understanding, you can only do that one time. You can only be grandfathered on a property one time if you need it. But most of the time, you save a lot of money by just asking the sellers if they would be okay with you being grandfathered into their insurance policy.
So it's difficult, Nicole. Let's say I sell a house and it has flood insurance and the current seller, let's say, pays $2,500 a year. That doesn't mean the new buyer is going to be paying $2,500 a year.
I say always quote it yourself too, because like I said before, we have private markets now. And a lot of times a private market can give you, I had a situation like that just at the end of last year. A gentleman bought a house at Southbury Beach, and he was going to be grandfathered into the seller's insurance. They were fine with that. And basically the policy was already paid off. So all they're doing is changing the name of the insured. And then, you don't have to pay as much. These people, what they did is they paid the prorated amount from the time that they started to own the house until the expiration of the policy. But when he sent me the information about the house and I quoted it with the private market was lower than what the current owners were paying. So he ended up just binding coverage with me on a private market. It's good to shop around, though. You shouldn't just take the first thing that comes.
Right. So what are you finding this time of year? What is your phone ringing off the hook for this time of year the most, since it's so cold outside?
Yeah. So this week I've had a few. I send Nicole's Tuesday tips, and this week I sent it about pipes bursting because Monday morning I had 2 claims. Tuesday morning I had a claim about pipes bursting. So pipes bursting is a big deal. Water damage is the number 1 claim that insurance companies have, and that I get for the most part. Ice dams is a big deal as well. So you have to make sure that you're taking care, winterizing your home, and brushing off your gutters and taking care of what needs to be taken care of for the winter.
Now, what about, like I called you this week, my windshield cracked. I swear it must have been the cold. It just.
Oh yeah, you have a small little crack. You don't even see it, but
Yeah.
it gets cold and then it spider webs. Yeah. So, for auto, as far as auto is concerned, in order to have a windshield coverage, you just have to have comprehensive coverage. That's all you need to have. And normally there's a deductible with that. But if you have the right agent, you shouldn't have a deductible pay out of pocket at all.
Should you be bundling homeowners and car insurance together?
I'm going to say 90% of the time it is in your best interest to bundle home and auto. That normally works. Not always. That's not always the case, but I would always try to bundle home and auto and show you what you would pay, because you do get a nice discount, especially on homeowners. A lot of companies give like 20% off, 15% off your homeowner's premium if you have your auto with them. But auto, it really depends on your driving record, where you live, all of that stuff comes into play. But for the most part, that I found that bundling is your best bet.
Do you recommend that homeowners shop their policy around every so often, or?
So this is how I feel about it. When the longer you're with an insurance company, if you have a major claim, that's taken into consideration. Yes, you can shop your house around and your auto around. I say, you should do it every 5 years, because if they see, these companies are all tied together. There's a database, they can see where you've been and how often you move. And so they don't like that. A lot of companies, they don't like when they see people moving around from company to company all the time. So I say every 5 years, you should just look, because it might be worth it. You might save a substantial amount of money by moving. And I say you should do that upon renewal, because you get your policy a month before it renews. That's enough time to shop around and see if there's anything better. But coverage is number 1. I always tell people, you have to pay attention to your coverage, because sometimes they look at the bottom line, which is the annual premium, but they're not looking at what they're really getting from one company to another. Every company has different endorsements that they add to your policy, and it also depends on the independent agent and how they quote you. So it's very important. I feel like coverage is a lot more important. than premium, because that's what matters when you have a claim.
Now, Nicole, I know like a lot of times, so for example, if we go to sell a house, can the buyer get a list of all the claims that have been put against that house? Because I've had people know everything that's gone on with some of the listings, how many claims have gone in, everything else. Every once in a while that pops up.
So normally an agent like myself will be able to let them know. I don't normally print out a list. I've never seen a house that has a list of claims. Most insurance companies I don't think they look back more than 10 years, and they only count against you for about 3 to 4 years, unless it was something major 5 years ago and they paid
So that's
thousands
how
of
they get their information, probably from like their new agent or
We
something
do,
like
yeah. So we do every company, as soon as I put in the address to a house, it'll tell me if there's been any claims, what kind of claim, and how much was paid out. Those are also rating factors for when we quote. So even though you didn't own it at the time, if there are prior claims and they're less than 5 years old, more than likely that's going to be a rating factor on the annual premium.
You have any other questions, girls?
No, I think that's it.
I feel like we went over a good amount today.
Yeah.
Yeah, we did. We covered a lot of stuff.
Yes.
Nicole, thank you so much for coming on. So if people want to get in touch with you, how do they get in touch with you?
I say the best way is through my website. It's nicolevargas.raveis.com. And my last name is V as in Victor, Argas. That's the best way. If you enter nicolevargas.raveis.com, you'll get my mobile number, you get my email address, you get my direct office line. You can reach me that way as well.
That's great. Thank you so much for coming on. We really appreciate it.
Thank you for having me. I really appreciate it. I hope to do this again sometime.
All right. Take care.
Thank you.
Bye-bye.
Bye.
Bye.